know how critical our pipeline is to the country, and I put the interests of the country first. I believe with all my heart it was the right choice to make.
We're debating now actively something I'm pretty excited about, a lot of us are pretty excited about, which is turning the incubator to focus very, very heavily on crypto.
I think you're in a global craps game where everybody's talking to each other and they're having a blast. I think a lot of the meme stocks are people having fun.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance, the early edition on this Wednesday, the 9th of June. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Bitcoin's pain continues as digital currency fluctuates with stretches from Oanda, Evercore, and Tollback eyeing a drop to $20,000. The UK pushes for a City of London exemption from the global tax deal set in motion just days ago. Rishi Sunak will make his case at the G20 next month. And in this hour, we'll be speaking to the former EU Commission President and Goldman Sachs advisor, José Manuel Barroso, plus the former ECB President, Jean-Claude Trichet, also joins us. Now let's get straight to the markets, though, in European equities trading mixed again as the Stoxx 600 actually headed for its fifth straight monthly advance. The focus, of course, firmly remains on U.S. inflation data due on Thursday, as well as any comments from the ECB on its purchase program. Now, in other markets or other parts of the market, some massive double or even triple-digit percentage fluctuations have become the norm. Yesterday, a health insurer backed by Chamat Palapatiya surged 86% after Reddit traders spotted that more than 40% of outstanding shares were actually shorted. Also, the veteran investor Ken Mullis likened the meme stock craze to gambling at a casino.
I think you're in a global craps game where everybody's talking to each other and they're having a blast. And by the way, you get to go home, the market shuts down, and you get to go to a bar. I understand you go to half of these bars, and the meme stocks are half the conversation. So it's just a lot of it's fun. Now, at every crap table, there 70-80% of the people are having fun and know they're going to lose their money and accept it. And there is somebody who's going to lose their mortgage or try to hitchhike home or lose their college fund. It's sad. I think a lot of the meme stocks are people having fun.
Now, in the struggle for legitimacy, Bitcoin may well be set to lose out again. Amid regulatory fears in the U.S. and China, some analysts are now predicting that the price could slump to $20,000. Well, joining me is the ever-student of Bitcoin, but also, of course, of markets, and he makes us smarter on what's ahead. MLive's Eddie van der Walt now joins me. Eddie, thank you so much, as always. Also, an Eddie in the office, which is quite exciting for the newsroom. When you look at Bitcoin, so, you know, we could talk about Death Cross, but you have a number of basically broker companies saying that it will go to 20,000. Are we looking at technicals, or are we just looking on, popularity on Reddit and other places?
Well, I can definitely say, being in the office is a little bit louder. I've had a number of people complain about, my volume on the telephone. But listen, Francine, I think you're right. I think there's a lot of nervousness about Bitcoin, because in the previous cycles, what we've seen up to We've seen up to an 80% drawdown in Bitcoin in the peak in 2017. We've seen the similar in the prior manias of Bitcoin. We've seen pullbacks of that scale, and we haven't had a pullback of that scale just yet. We've had a pullback of about 50% or so from the high, or somewhat less than that. So there are a lot of people who are worried that we get a similar size drawdown here, and it feels like the regulatory mood has just changed. People are a bit more nervous about the Fed and the powers that be in China just pushing back against Bitcoin.
But so I want to bring you to our morning must-read, actually, Eddie, and this is a Bloomberg opinion columnist, John Authers. We both know him, writing this morning that Bitcoin has run into moments of speculative excess that certainly look like bubbles several times already, but he argues, as I've pointed out before, the price has gone on to recover. The analogy of a fad or a virus that finds a way to mutate is a better one than a bubble. I mean, what does that mean for traders?
Oh, gosh, that is a good line. That's the problem with John Authers. He's so good at what he does. It's almost irritating. I tell you what, I read that and I agree. And the situation with Bitcoin is such that, if you play it on the short term, then timing is absolutely everything. Picking it wrong can be catastrophic. I know of people that bought in 2017 and, pulled out in sort of 2019 and lost pretty much everything that they put in. But on the other hand, if you look at this as a long-term technology play, then Bitcoin's been absolutely fantastic, right? People have made absolute billions on it. So it's all about your time frame and your risk appetite as an investor. Are you willing to lose, 80% in the short run to make the long-term gains? And that is what you've got to look at with Bitcoin.
Eddie, what else are you looking at in the markets? I mean, I know that the question that comes, in and out every couple of days is, are we going to be importing inflation from China? And how problematic that is going to be. Yeah,
we had a lot of noise from China pushing back against higher commodities prices, but it is, China is, of course, is a price taker in many commodities and is the buyer in many commodities, so that they want to see lower prices is not surprising. I think, there's cost pressure everywhere. We are seeing small businesses struggling to fill vacancies. And I think that is more worrying for people like the Fed and for the ECB. Of course, the ECB will be quite happy. Going into the ECB tomorrow, I think that is the big event for now. And, some data out of the US as well. But I think for the ECB, they would love to see just a little bit of inflation coming through so that they can start raising rates, so that they can see their banks on a better footing.
Yeah, but equities, they're still on a tear.
They are, and I think even if we see a pickup in inflation and we see higher rates, that's going to hurt the tech stocks. But I think we're starting to see a market that is strong enough that it can perhaps sustain a bit of a rebalancing and a pivot away from the tech stocks, and maybe into value and so on, and that the overall indexes won't be hurt too much.
Eddie, thanks so much. Eddie van der Veld there from our MLive team, joining us on some of the market moves, including Bitcoin. Now, Smart Conversations on Bloomberg Surveillance Early Edition. Stay tuned for our exclusive guests this hour. Later on in the program, we'll preview the upcoming ECB meeting with the former president, Jean-Claude Trichet. Up next, though, we speak to former European Commission president and current co-chair of the Reform for Resilience Commission. He's José Manuel Barroso. If you have any question for our guest, just IB plus TV Go. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, our next exclusive guest is a former European Commission president and current chair of London-based Goldman Sachs International, José Manuel Barroso. This morning, he joins us as a current co-chair of the Reform for Resilience Commission, which groups leading figures in business, science, and politics, pushing for a truly integrated approach to global health, economics, and the environment. Much like a post-pandemic Bretton Woods, well, José Barroso joins us now. Welcome to Bloomberg, and thank you so much for giving us a little bit of your busy schedule. First of all, Mr. Barroso, when you look at everything that's going on, the recovery, but also the need for vaccines, vaccine distribution, not only in developed countries, what are we getting right, and what are we getting wrong?
First of all, I think we have to learn the lessons of this pandemic. It's true that there was great progress in vaccines, record, so we could develop vaccines in a record time, but there are problems in terms of distribution and delivery, and there are inequalities also. And the point we have been saying is that we need a stronger commitment to rapid vaccine delivery all over the world, because it's not just a slogan. It's no one is safe until everyone is safe. Why we say that? Because while the virus is circulating, there are more possibilities of new variants, possibly more transmissible and more dangerous. And we are seeing that, in fact. So at the same time that there has been very successful rollout in some parts of the world, namely in UK, in the United States, also Europe now is catching up, and other parts of the world, the reality is that there are other, let's say, low-income countries that are much, much, much behind. So we need to speed up that effort. But besides that, besides this most immediate priority because the pandemic is not over. Far from that, we need to think globally about what we are going to do in the future. And what we are proposing, this Resilience Commission, is that we look at the issue of health and economic resilience as seriously as we have been looking after the financial crisis of 2008 and the following years to financial sustainability and stability, and also as we are looking to climate change. And in fact, those issues are linked. So health, economics, and environment are linked. And what we are proposing, based in a study of a very, very, let's say, great scientists from a great network all over the world, is for the G7 and then the G20 to take the leadership in this and to make this a kind of a Bretton Woods moment where we can look holistically in a much more determined and structured way to the issues of health resilience.
But Mr. Barroso, do you see that that countries and leaders are willing to do so? Are we at a moment where actually there's a lot of commonplace for leaders to come together, or is it still each for their own? I mean, we're seeing even with taxes now, the UK wants financial services to be exempt from this 50% global tax. What does that mean in practice?
Look, in general terms, I see some progress. Like this last week, I had the honor, together with the Prime Minister of Japan, to host a pledging conference for COVAX, for the global facility to distribute vaccines. And in fact, we exceeded our objectives. So we have seen also great cases of generosity. But more has to be done in terms of commitment. For instance, in terms of dose sharing, countries that have surplus doses, we have to share some of those doses. If not, of course, we'll have huge differences that can only become more serious. So we see some progress, and we believe that the leaders of G7, the wealthiest countries in the world, now have to do more. We hope, in fact, to have some progress in this G7 summit. We saw also some announcements made, not only in terms of financial commitments, but also in terms of solidarity to the developing world, to low-income countries. Mm-hmm. And we believe this is a way forward. And also, by the way, the OECD should be part of it through also some of these measures that we are proposing. So, yes, there is some progress, but to be honest, Francine, not so much as we'd like to see. We need more urgency.
Okay, in what kind of field? So specifically, what do we need to work on? We keep on hearing from leaders that they're rebuilding better, but actually, what is the actionable thing that they can do in the next 2 months to make a real difference?
First of all, increase the pace of vaccination. And I've told you how we can do it by sharing doses globally. Of course, the pharmaceutical companies, they are ramping up production to have more funds for those who don't have the means to buy those vaccines. This is a very concrete thing. To go as far as possible. We believe now it will be possible by the end of the year, beginning of next year, to have at least 1.8 billion of vaccines distributed to low-income countries. That's what we are doing. And that has been progress. This is the first thing. But beyond that, we have to recognize one thing. The world was not prepared for this pandemic, including the richest and the most powerful countries in the world. They were not prepared. There were not mechanisms of adequate surveillance, sharing of data. There was not, in fact, even some protocols of cooperation. So we need to invest more. There was the investment on health resilience was neglected for many years. And what we are saying is that we should consider this matter of health resilience at least as important as financial stability or climate change. And these matters are connected. That's why we are proposing the leaders to have a kind of a Bretton Woods moment to reinforce the global mechanisms, for instance, with increased transparency in terms of pandemic preparedness, but also further investment in global health, because health is very much linked, of course, as we are seeing, to economics.
Mr. Barroso, so going back to what Rishi Sunak seems to want to propose, which is that financial services and finance companies be exempt from this 15% global tax. Do you agree with that? Is that the good strategy for banks based in London?
I'm sorry, I have not yet seen that proposal. I'm not in a position to comment. I believe the global effort to have a minimum tax that is being promoted now makes sense. And I think there is progress made by the G7 at the level of finance ministers, and most likely we'll see that now ratified by the heads of state and heads of government meeting this weekend in UK. That is progress, and the OECD is working on that, and we hope that the G20 will approve that as well. Now, about that specific proposal, I'm so sorry, but I have not yet seen it. I cannot comment on that.
No, it is absolutely fresh and new, so of course I respect that. Mr. Barroso, when you look at some of the tensions between the UK and the EU because of Brexit, again, what's the right way forward? What does it mean for financial services? Do we just need some kind of agreement on the protocol that the EU need to back down to make sure that actually we're on a much steadier path and more of a friendship between the two?
There has been some friction, unfortunately. I believe it's unfortunate to have this friction, but in a way it was almost unavoidable. I mean, when there is a separation after so many years, it's like in a couple, there is some trauma. And we are still in this post-traumatic moment in the relations between the UK and the European Union. I hope now there will be more constructive talks. There are issues that have to be addressed. The issue of Northern Ireland is a very complex issue. But I believe in financial services. If you want my sincere opinion, I'm not speaking completely independent. I'm no longer president of the European Commission. I remain a very committed European. I believe that there will be divergence. I think now it's quite clear that the United Kingdom wants to go its own way. It has its right to take also some, let's say, benefits from some, let's say, specificity of its financial regulation, which does not mean, by the way, I don't think it means that they are going to lower the standards. I know well the British regulators, they are extremely strict. They are not going to lower the standards, but in fact, they are deciding to go their own way. And also the European Union that accepted the free trade agreement in terms of no tariffs, no quotas for goods, has not completed a financial services agreement with the United Kingdom and will not complete. There will probably be a memorandum of understanding in some global principles, yes, but I do not believe there will be some kind of passporting or the rule of equivalence. So we are going to see some divergence in terms of the global approach to financial services in Europe, in the euro area, but also in the European Union as a whole and in the United Kingdom.
So how do you see London actually faring as a financial center given all of this?
London is one of the two biggest financial places in the world, and I believe it will continue to be because it has a great tradition, great know-how. It's a hub. It's, a cluster not only of very important financial institutions, but legal, audit companies. I mean, there is a real let's say, cluster of strengths here in London. At the same time, we are seeing also that the European regulators are making it clear that they want that those who are operating, namely in the euro area, and the European regulators, everybody around the European Central Bank and European Central Bank, making clear that they want also those capabilities to go to Europe. So in Europe, there will not be just one center. It's from Paris to Frankfurt to Milan to Amsterdam to other places. So there will be, I think the international banks are going to increase their footprint in Europe, but London will certainly remain a very important and global major hub for financial services.
Thank you so much for your time today, Mr. José Manuel Barroso there, the former European Commission President, co-chair of the Reform for Resilience Commission, and of course, chairman at Goldman Sachs International. Now, smart conversations continue on Bloomberg Surveillance. Early edition coming up, we'll speak exclusively to the former ECB President, Jean-Claude Trichet, about the upcoming central bank meeting. Now, if you have any questions for him, IB Plus TV Go. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance, the early edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The UK is pressing for the City of London to be exempt from a plan to make multinationals pay more tax to the countries they operate in. Chancellor Rishi Sunak is expected to make the case that financial services should not be included in the deal when talks move to the G20 next month. He says he wants to make sure the right companies pay the right tax in the right places. Now, EU leaders and President Joe Biden will commit to ending outstanding tariff disputes disputes when they meet in Brussels next week. Draft documents seen by Bloomberg reveal both sides will pledge to remove tariffs related to a steel and aluminium conflict by the end of the year. Also included is a plan to end a near 20-year dispute over aircraft manufacturing that saw more than $18 billion of exports subject to levies. The US and EU are set to back a renewed investigation into the origins of COVID-19. In a draft statement seen by Bloomberg, they are to call for a transparent, evidence-based WHO study that is free from interference. Several countries have called on China to be more transparent amid ongoing questions over whether the outbreak was caused by a lab accident transmitted from wildlife or something else. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Thank you so much, Leanne. Now, coming up, European stocks near record highs as the EU finally hits its 2% inflation target. What should the ECB do next? Well, we'll discuss inflation with Jean-Claude Trichet. If you have any questions for him, IB plus TV Go. This is Bloomberg. Well, Bitcoin's pain continues. The digital currency fluctuates with strategists from Oanda, Evercore, and Tallbacken eyeing a drop to $20,000. The UK pushes for a City of London exemption from the global tax deal set in motion just days ago. Rishi Sunak will make his case at the G20 next month. And up next, the former ECB president, Jean-Claude Trichet, joins us to talk about the central bank's upcoming meeting, or more than that, also inflation. Well, good morning and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, it may have taken a global pandemic and unprecedented stimulus measures, but the ECB has finally hit its 2% inflation target. European stocks have ridden the wave to a 5-month winning streak, the best in 8 years. But what should the ECB do next? Now, if Europe's central bank wants to align with the Federal Reserve, which has a much higher CPI figure to contend with, then the answer may be nothing at all. Our Bloomberg opinion columnist Marcus Ashworth writes, a brief period above its target is the least of Europe's troubles. The smart thing for Frankfurt's monetary policymakers is to head for the sun loungers and not meddle with the course they've set. Well, joining us now is Jean-Claude Trichet, the former ECB president. Monsieur Trichet, thank you so much for joining us. I know you're also doing a lot of work, of course, on sustainability, climate change, and actually how you make this recovery stronger. First of all, given what we know so far, are you confident that leaders and central banks will rebuild a stronger economy? Are we rebuilding back better?
I think that, of course, it is the very important question. And there is at least a consensus to consider that we have to draw all the lessons from what has happened and prepare very, very actively for all what is transitioning, namely the digital transition, the climate change, and I have to say a number of other lessons that we can draw from the COVID-19, including, of course, the health issue, which is so important as a global goods, a global public goods. So clearly, we are in a different universe from now on. I take it that as far as there is a consensus by, I would say, all countries concerned, particularly since the change of the administration in the US, including in the US, that is, inciting to some optimism. But the task is very heavy, and there is no time. This is no time for complacency at all, of course.
Mr. Trichet, when you look at some of the inflation debate, first of all, are you worried that Europe will simply be left behind because we don't have the amount of stimulus that the Biden administration is throwing at the U.S.?
First of all, I think that it is absolutely clear that the European, in terms of business cycle, overall cycle, because of the vaccine, because of health, and not necessarily only because of the stimulus that the US has engineered, but all taken into account, the Europeans are a little late in comparison with the US. That's obvious. But that being said, it seems to me that the question was on inflation. To the extent that over the last 10 years, all central banks of the advanced economy have tried to get back to a more normal level of price stability, namely around 2%. And that was the case in Japan, in the US, and in Europe. If we see that we are closer to anchor inflation expectations around 2% in the medium and long run, it's good, of course. We could not continue forever with a very low level of inflation below the definition of price stability in most European countries, and in all European countries, by the way, and in most advanced economies. So I think that all taken into account, it's good that we see that we are getting out of the 0-1 level, which is not yet the case in Europe, as you know, because we have an HICP at the level of 2%, if I understand well, but it is due mainly to the energy prices that are plus 13%. And if I take the core inflation in Europe, we are still at the level of 0.9%. So clearly, we have a phenomenon which is very much linked to energy prices in Europe.
I know you've always been very cautious about, sounding like you're giving the current ECB president advice, and you've never really done that in the past. But if you're still in charge, there's a number of things that, of course, President Lagarde is looking at. Should it be just steady as they go? Is this not the right time to do anything for them?
Well, we will see exactly. And as you know, we will have tomorrow the new projections of the ECB and of the Governing Council. And those projections are very important, both in terms of growth, in terms of inflation. So we will see. I don't want to, I would say, anticipate on what will be said tomorrow. I would not be surprised, obviously, if there was a reviewing up growth, because clearly we are at a moment in the global economy and in all economies where things are going better, at least in the advanced economy, very, very visibly, because of the health issue, the vaccines that are going now very, very well, including in Europe. And so it would be normal, in my opinion, to observe some kind of pickup in the projection. But we will see. I don't want to anticipate, as I said, in any respect. But all that being said, I'm sorry, please.
No, go ahead.
No, all that being said, it looks like, again, in terms of anchoring solidly medium and long-term inflation expectations around 2%, and we will see exactly what will be the conclusion of the policy review that is ongoing. But it seems to me that we are certainly not at a level where inflation would be a danger in Europe. In the US, it's different.
Do you think that there is a danger that actually the US economy overheats to a point where, the Fed will have to do something when the market doesn't expect it?
Yes, it seems to me, again, the US is in a very different position in comparison with Europe. That's absolutely clear. We have a level of public finance deficit which is extremely high. According to the IMF, something like 16% in year 20. In 21, minus 15% of the GDP. So it's big, it's very big. And we have a current account deficit, which is the structural current account deficit of the US, but which is at the level for the forecast of the IMF, minus 4% of the GDP. In comparison with Europe, we are in Europe in a totally different universe, where the current account is in surplus in Europe, and in 21, perhaps plus 3% of the GDP. So you see, the comparison between the US and Europe is underlying many differences. And it's clear that the US is close to some kind of overheating, in my understanding. That being said, I have full confidence in the Federal Reserve to do what would be necessary to avoid inflation phenomenon that would be very dangerous. So I have no doubt that they will do what is necessary in order, again, because it's the definition of price stability on both sides of the Atlantic, to anchor solidly inflation expectations in line with the 2% figure.
Jean-Claude Trichet, thank you so much. The former ECB president stays with us, and we'll talk a lot more about the G7 and taxes, because coming up, as G7 heads prepare to meet in Cornwall this Friday, a global minimum corporation tax is closer than ever. But should London's banks be exempt? We'll have the details next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, there's quite a lot going on. We look at the meme stocks or the meme stonks, whatever you want to say, but actually Gamestop, definitely front of mind. AMC also definitely front of mind. I mean, AMC, I've never seen anything like it in terms of market fluctuation. Actually, I have seen something like it. It was called GameStop. But GameStop today, pre-market, gaining 3.3%, AMC down 4.8%. Now, a 15% global minimum corporate tax is closer than ever as world leaders thresh out the plan originally proposed by the U.S. Last weekend, finance ministers from the G7 agreed to the scheme, partly intended to target tech giants and slated to include Amazon, despite its small margins. Now, as G7 heads prepare to meet in Cornwall this Friday, British Chancellor Rishi Sunak will argue for the City of London to be exempt from any new rules. Well, we're back with Jean-Claude Trichet, former ECB president. Monsieur Trichet, thank you so much, first of all, for sticking with us. And then, so we're quite excited, or some people are excited, that there was at least consensus, which is more than we've had in the last 10 years, about this 15% threshold. The UK is now trying to negotiate something for financial services. What does that mean? That we won't really get an agreement, or that we're just going to see country after country try to negotiate something better for what suits their country?
Well, we will see exactly what happens. And I considered this accord, the consensus of the G7, as an extremely important one, obviously. And certainly something that the European in particular had considered since a long period of time as very important to take up with the tech giants, as you said. We will see what happens from now on, but an accord of this type is interesting if it is really generalized for all and global, I have to say. This is an accord between the G7. It has to be put at the level of the international community as a whole if we want it to work, really. Otherwise, there would be some kind of, I would say, evasion from the rule. But again, I take it as a common sense remark that it would be good to have it apply to all jurisdiction and all sectors. That's the idea.
Because otherwise, Mr. Trichet, the idea is that if you make exceptions, that it's not, then we don't get anywhere? Or what's your thinking on that?
No, I mean, again, there will be negotiation, obviously, and between the seven also and the other countries of the world. And we are not alone. The G20 exists and the international community as a whole exists. But I would say it's a very good consensus, a very good proposal made by the G7. I hope very much that it will crystallize. And if we want it to really work, it seems to me that it has to apply to all jurisdictions and all sectors. Yes.
Monsieur Trichet, I mean, we're also all experts now in the Northern Ireland Protocol. Is it time for the two parties to actually, to put their differences aside?
Well, I think, again, it has to be solved, clearly. And I hope very much that it will be solved as soon as possible. It is certainly very, very important for the relationship between the European Union and the UK. And I take it that we must find a solution. But that being said, the negotiators are there, and we will see what they do, of course.
Do you look at Bitcoin?
Yeah. Well,
do you look at Bitcoin?
I have always referred to the definition of money, of currency, by Aristotle. Aristotle said very clearly a good currency, has to be a good instrument of exchange, a good instrument of accounting, and a good instrument to keep its value, and to keep its value over time. The cryptocurrencies are not good instruments to keep their value over time. They are very much speculative instruments, at least until now. Those who are not envisaging to anchor their own value. So the Bitcoin is exactly what I thought from the very beginning, a very, very speculative instrument going up and down, up and down, up and down. And this is not a currency, of course.
Do you think that we'll see something else, a cryptocurrency that will become either a store of value or something to play a really prominent role?
Again, if we want any currency to be a good currency, accepted as a currency, it has to keep its value. I trust the central banks, the present central banks, to be very, very active in keeping the value of the currencies they are issuing. And if any cryptocurrency is directly connected to a central bank, which is the case for the central bank cryptocurrencies that are envisaged now practically all over the world, or if it is a currency which is aiming at anchoring its value to a basket of currency, then we are in a different universe. I don't suggest that I would call for this or that. I trust that it is absolutely normal that all central banks in the world are working actively to see which kind of benefit they can draw from the new technological surge. And I know that it is done everywhere, including in Europe, as is the case presently. But again, we are in a totally different universe when we are speaking of currencies that are not aiming at keeping their own value, which is the case of the Bitcoin and others such cryptocurrencies.
Monsieur Trichet, thank you so much as always. Jean-Claude Trichet, there, the former ECB president, with us. Now, joining us a little bit later, we'll also talk about the narrative around Bitcoin and Ethereum. We'll have a couple of big shot investors. Coming up, the G7 leaders arrive in southwest England later today after finance ministers agree on a substantial global tax reform deal. What should we expect from the summit in Cornwall? That's coming up next, and this is Bloomberg.
They are the internet skeleton. About 400 of them already cover the planet. And at the end of this year, the latest undersea cable will emerge off the south of France, dubbed the Peace Cable. It'll be able to transfer 90,000 hours of Netflix from China to Europe and Africa in just 1 second.
Peace is a Chinese cable. It's paid mainly by a Chinese operator, and as I have mentioned, it will use mainly to transport some Chinese data.
The cable itself will be built by China's Hongtong, and French telecom giant Orange will operate its landing station in Marseille. The French port will connect China to Europe via Egypt over 7,500 miles across the Red Sea and the Suez Canal. Another route will head to South Africa via Kenya over more than 9,000 miles across the Indian Ocean. A feat in engineering, but the biggest hurdle may be geopolitical. Huawei is a big shareholder in the company building the Peace Cable, a sticking point on security for the U.S.
In Canada, for example, we've seen data be rerouted to China. We've also seen, for instance, what happened with the Africa Union. So it's clear that Huawei has a pattern of behavior that shows data being moved to China.
Internet giants like Google and Facebook already said they won't use the Peace Cable, officially because they have enough data transfer capacity. However, last year, both Google and Facebook suspended part of another cable they were supposed to build between LA and Hong Kong over data security concerns. While the U.S. has taken a harder stance against Chinese telecom technology, French President Emmanuel Macron and German Chancellor Angela Merkel have signaled that despite the security risks, they won't isolate China.
You don't take unnecessary risks, but there are many risks associated with taking a nationalistic view to technology. It can potentially break the architecture of the internet.
And whether or not the U.S. is happy about it, the proportion of Chinese-built undersea internet infrastructure is projected to grow from 11% in 2019 to 20% in the next decade. A silent fight underwater for supremacy of the World Wide Web.
Well, that was Danny Berger reporting there on the geopolitical hurdles that the so-called Peace Cable is facing. Now let's get straight to your Bloomberg Business Flash. And actually, Saudi Aramco has started marketing its first dollar-denominated bonds. We'll have plenty more on that, of course, throughout the day once we actually get to Leanne Gerrans. Let's check the markets because they've been open for a bit, and actually it's always a good and wonderful idea to look at what trades we're seeing. The dollar slipping, the longer-dated Treasury yields lower as investors awaiting Thursday's U.S. inflation report before gauging the direction of monetary policy. Now, the other thing that, of course, we're watching for is the global markets indecision. This is a tug-of-war between traders who believe that accelerating inflation is transitory and those who bet it'll prove persistent enough to actually warrant tapering from the Federal Reserve stimulus. Now, with stocks near record levels, U.S. yields already high relative to peers, for example, traders find little room for maneuver. Then there are some of the stocks or some of the meme stocks, if you want to call them that. Pre-market, you can see a Gamestop gaining some 1.1%, AMC actually down some 7.7%. Now, a couple of the other stories we're watching, of course, later today, we have the EU, UK, and EU officials meeting. The UK also pushing for finance exemption for this global tax deal. Now, Bloomberg Surveillance early edition continues in the next hour. Matt Miller joins me out of Berlin. Kailey Leinz will join me out of New York. We'll have you covered for the markets. Of course, we look ahead to what else is happening today. A lot of conversations about the infrastructure deal in the U.S. And going back to the G7, we're expecting the UK and the EU to meet to try and find maybe some kind of agreement on Brexit. Otherwise, it risks overshadowing the G7. And then the Chancellor, of course, Rishi Sunak, also wanting to make sure that the right companies pay the right amount of tax in the right places. This is what the Treasury said yesterday. So we'll have a full roundup of the global tax deal. Again, an EU official actually pushing back on the tax deal, saying that, look, the idea of an exemption for a financial services firm is not something that they're keen on at the moment. This is Bloomberg.
We're debating now actively something I'm pretty excited about, a lot of us are pretty excited about, which is turning the incubator to focus very, very heavily on crypto.
We were on this path for over a year, but ultimately decided it was time that crypto had emerged as an asset class that was broadly ready for the public markets and wanted to take that step forward.
I think you're in a global craps game where everybody's talking to each other and they're having a blast. I think a lot of the meme stocks are people having fun.
This is Bloomberg Surveillance, early edition with Francine Lacqua, Matt Miller, and Kailey Leinz.
Well, good morning, everyone from London, Berlin, and New York on this Wednesday, June the 9th. Our top stories today. Crypto crash. Bitcoin keeps falling. Some analysts say the next stop for the world's biggest digital currency could be $20,000. Joe Biden prepares for his overseas debut. The president flies off to Europe, where he'll meet with G7 leaders and later Vladimir Putin. And a compromise in the works while House Democrats and Republicans come up with their own version of an infrastructure package after President Biden's attempts to cut a deal go nowhere. Now, there is quite a lot going on also because we're looking at inflation prices, Kailey, and that old chestnut of are we exporting or are we importing inflation from China has come back with factory gauge prices. What else are you seeing on the markets?
Well, of course, we've gotten that inflation data from China, Francine. We're awaiting the inflation data here in the U.S. with the CPI print tomorrow. Where that left us in the Asian session was a bit mixed. You did have Hong Kong, Japanese stocks lower. China, though, did manage to end fractionally in positive territory, but it was a very volatile session after that inflation print. You had producer prices up 9%, the highest since 2008 because of higher commodity prices. But consumer prices actually, CPI jumped less than expected, just 1.3%. That was the biggest gap between the two since 1993. After that data, we didn't see a lot of action in the Chinese bond market. The 10-year yield effectively unchanged, right around 3.13%. The Chinese yuan, though, is stronger against the U.S. dollar, as is the Japanese yen, though just fractionally, the yen sitting at 109.48. As for what the picture looks like here in the U.S., we are just shy of record highs for U.S. equity benchmarks. Right now, though, not a lot of movement in the futures market. We're up about 4 points or so on S&P E-minis. More movement in the Treasury market with yields coming in for a second day. We're down about 2 basis points on the 10-year, 1.51%. That is the lowest in about 3 months. In the commodity complex, you are seeing WTI crude holding above $70 a barrel. Bitcoin, though, below 34, or actually right now just fractionally above $34,000. But of course, that volatility has continued, Matt, and some saying it could go down to 20,000.
I feel like we're getting a little ahead of ourselves with 20, right? We haven't hit 30 yet. We're jumping. I guess Bitcoin tends to move quickly, but man, at 34,000, already looking at 20, that is bearish. Let's take a look at what's going on in European markets. We have, if you look at the world map, a lot of gray on the screen, so very little direction. Remember, we've got a really important set of data coming out. You have US CPI a little bit later. Then you've got the ECB tomorrow, so we'll see if Christine Lagarde can get even more dovish. But right now, it looks like traders are sitting on their hands for the most part. You can see that Great Britain and Ireland are both down a little bit. The Stoxx Europe 600 is basically unchanged here. The 10-year bond, interesting, as you know, last time the ECB met, we were looking at rates that were pushing up back towards zero. Now they're coming down under negative 20 basis points right now at negative 23, negative 24. Euro Swissy, I'm told by the MLive blog, is a great pair to watch today because if that inflation data beats expectations, if it's an upside surprise, which I guess that's beating expectations, although maybe it's worse for the average Joe trying to buy a six-pack in America. That could push euro higher against Swissy, and it has been coming down. Ferrari doing very little right now, and that in itself, I think, tells a story because Ferrari tapped a new CEO, a little-known tech executive from ST Microelectronics, Benedetto Vigna. Am I saying that right, Francine? Benedetto Vigna.
100%.
Is that
A+, full marks.
Okay, excellent. Well, look, it just goes to show the direction that these car makers want to head. Ferrari ahead of the pack, hiring the techiest of all CEOs. The guy comes from a chip maker. He designs things like screens. And in a Ferrari, I want to hear a V12 engine, not look at an 8-inch touchscreen, but I guess I'm not the average consumer.
Right, and that's a given. I mean, the engine sound hopefully will always be there. I love Euro Swissy. I think Tom Keane always has that tattooed to his brain because that's what the pros look at. Now, that is what else we're looking at today. UK and EU officials are set to meet today to settle a trade dispute that could spill over into G7 meetings at 10 a.m. New York time. Also, the Bank of Canada will announce its latest rates decision. We'll get U.S. wholesale inventories at that time as well. And then half an hour later, the EIA releases its crude oil inventory report. On to other big news, and a group of House Democrats and Republicans have agreed to their own version of an infrastructure package. That's after talks between President Biden and Republican Senator Shelley Moore Capito fell through without a deal. Let's get straight to Jack Fitzpatrick, Bloomberg government reporter with the latest. So Jack, the deal didn't go through, but now they're going to work on getting part of the deal through without the GOP support.
Well, here's where things stand. Things did not go well between President Biden and Senator Shelley Moore Capito as the point person. Biden told Capito he would cut those talks off yesterday. There is a bipartisan group of senators working together, though, so that's Plan B. They do not have a plan put together just yet, but they are working on one in a smaller group of about a half a dozen senators, and then they'll present it to a bigger group of bipartisan members, and they'll see if they can get something better than what was yielded from the Biden-Capito talks. Meanwhile, there are a number of Democrats who want to go it alone, and we heard from Senator Bernie Sanders, who is the budget chairman, saying they should work very soon on the initial parameters to push this through in a partisan way if necessary. So that would be the other backup plan. But there are still some bipartisan talks going among a group of senators right now.
You know, I'm getting numb to these numbers, I think, because 250 doesn't even raise my eyebrows here anymore. It's not even $1 trillion. It's not even the GDP of Ireland or the GDP of the City of London, which, by the way, is much higher than the GDP of Ireland. I let out an audible chuckle. I lolled today when I saw the headline that Sunak may want an exemption from this global tax already for the City of London. I mean, if we're already going to start poking this thing with loopholes, how important is it?
Well, that's a good question in terms that we'll look for at the G7 meeting on the minimum tax proposal. I would also point out, though, that even just the idea of this is getting pushback in the U.S. from Republicans, and there have been some warnings in the Senate that this just isn't going to get any Republican support. So clearly, that is one thing to look for at the G7 if the proposals are weakened or if the pushback in the U.S. weakens the sort of rallying cry for those talks. And that seems to be one of the primary points of focus for the U.S., that tax proposal, aside from everything we've heard about from what you can look forward to with Biden's meetings with Putin and Erdogan and non-G7 leaders. But the tax issue and its potential weaknesses will certainly be a focus coming up at the G7 meeting.
Really all about taxes domestically and abroad. Thank you so much to Jack Fitzpatrick of Bloomberg Government. Well, moving on to markets now, and $20,000 Bitcoin. That's what some strategists think could be a new downside target if the weakness in the largest cryptocurrency continues. Let's get more from Bloomberg MLive macro strategist Laura Cooper. Laura, as Matt points out, we're at $34,000 now. $20,000 seems like it would be a very, very sharp move to the downside. Could we really see that?
Well, we could potentially see that. And I think that's just a case of looking back at previous bubble burstings in Bitcoin. The moves tend to be about 80% drawdown. So given the fact that Bitcoin is only about 50% below its April peak, yes, that does suggest that we could see further downside. I think really the latest catalyst around the U.S. authorities being able to recover a ransom does raise questions about the security of Bitcoin. But really, at this point, it's going to be quite challenging to really have a new narrative for new money to pile in, because it's really a speculative asset that needs that fear of missing out component to really push higher.
I spoke with Blackstone's Byron Wien yesterday, a legend on the street, but an old legend on the street. He's not a fan of Bitcoin. He says maybe because of his age. Listen in.
Well, 4,500 was a pretty ambitious forecast at the time I made it. At the beginning of the year. And I don't revise those targets during the year, regardless of whether they make me look good or bad. So I'm sticking with the 4,500. I feel pretty confident about that.
Sorry, that wasn't the Bitcoin SOT. That was the S&P SOT. But he did say, in terms of Bitcoin, maybe he's a little bit too geriatric nonetheless, getting a lot of pushback on that on Twitter. In terms of the S&P target, look, we're already up 13% year to date, Laura. Is it really bullish? Is he way out front of consensus with 4,500?
I don't think he's bullish. I mean, I certainly think, right now markets are waiting for that next potential catalyst to move higher. And that could yet come potentially from a dovish Fed. We have yet to see what could happen in those inflation prints. But really, I think crucial for markets are those two event risks tomorrow. One is the ECB. It's likely to maintain that dovish tone, that significant pace of asset purchases to continue. And then that US CPI print. Yes, there's a lot of hype around it, but looking at what Treasury rates are telling us, we actually have seen the 10-year now break below its recent trading range at 3-month lows. So this is a market that is looking to have conviction that the Fed, this is really just going to be transitory inflation. So I think we're going to have to see a series of upside price pressure prints really to change that narrative. And I don't think tomorrow could be that catalyst unless, of course, beyond that knee-jerk reaction potentially in real yields and the dollar.
All right, Bloomberg M Live's Laura Cooper talking all things markets. Thank you so much. And let's talk more about the markets and some idiosyncratic stories, stocks moving in pre-market trading here in the U.S. I want to begin with Lordstown Motors. Of course, the EV startup recently went public via a SPAC, and last night, shortly before the closing bell, filed a going concern warning. Says it may not have enough cash to get through the next 12 months unless it raises more capital. The stock fell about 16% yesterday on that, and those declines continuing this morning, down another 2.25% or so. No declines, though, for some of those meme stocks. The Reddit traders are going at it, talking about a potential short squeeze for Context Logic that drove the stock higher yesterday. That continues this morning. It's up 32% in early hours. And of course, another meme stock we always keep an eye on is GameStop, the OG, the poster child for this phenomenon. We actually are going to get some fundamentals from the company later on today when it reports first quarter results after the bell. Ahead of those numbers, the stock up about 2% in pre-market trading, Francine.
Yeah, we'll look at that. I mean, GameStop, I think it was up some 6% last time I looked, like 20 minutes ago. So it's definitely volatile or moving, on the move. Coming up next, he's also on the move, Stephen King, HSBC Senior Economic Advisor. I don't know whether he looks at some of these meme stocks, but maybe we'll ask him. And we'll also talk to him about inflation. And then later on to talk G7, Robin Niblett, Director of Chatham House. This is Bloomberg.
In terms of anchoring solidly medium and long-term inflation expectations around 2%, and we will see exactly what will be the conclusion of the policy review that is ongoing. But it seems to me that we are certainly not at a level where inflation would be a danger in Europe. In the US, it's different.
That was Jean-Claude Trichet, former ECB president, talking inflation earlier on Bloomberg. And I was trying to actually remember how many times I've doorstepped Mr. Trichet over the last maybe 15 years. And I think we're looking at thousands of numbers of times in EU summits at like 2 in the morning. And he's always been a gentleman, polite and declining to be doorstepped. Well, joining us now, he's polite enough to actually also come on TV. Stephen King, he's Senior Economic Advisor at HSBC. Stephen, thank you for joining us. Monsieur Trichet was basically saying that he's worried the U.S. will overheat, which is a very different problem to what we have in Europe. Should the ECB even worry about inflation at this point?
I certainly think the ECB can be more relaxed about inflation than the Fed can be, which is a kind of statement of the obvious, really, because, of course, we're seeing an awful lot of monetary and fiscal stimulus coming through in the US. We've got the Federal Reserve adopting a new inflation policy, the average inflation targeting approach. So if you were a sort of cautious ECB type, you'd be looking at the US and thinking this is all rather overly experimental compared with what you typically see in Europe. So yes, absolutely, I think Trichet is right to suggest that if there's a risk, it's more on the other side of the Atlantic compared with Europe.
I will never forget former Bloomberg anchor Mark Barton chasing Jean-Claude Trichet down the escalator at Finsbury Square to doorstep him. And at that time, we were always asking about the movement in currencies. Of course, inflation right now is front and center. I've got a great chart here, Stephen, and I'll welcome our Bloomberg Radio listeners as well and walk them through what we're seeing here on screen. It's two panels, and the top panel is China producer prices. We saw that data come out this morning up to the kind of levels that we haven't seen since 2008. 2009. Now, the interesting thing is the bottom panel, Citi Global Inflation Surprise Index, it tracks with Chinese PPI pretty well. And right now, we're up at a level there that we haven't seen since 2008 either. It begs the question, how important is Chinese inflation as a global driver? What do you think this is going to result in terms of, for example, U.S. CPI, Stephen?
Well, first of all, it begs the question, why using the Citi index rather than the HSBC index, which I believe is far superior to the Citi index, but although let's say roughly the same thing. But I would just emphasize that, I mean, obviously what the index is capturing is mostly the movements in commodity prices, which are very, very influential in terms of near-term changes in inflation. What I think, however, central banks are worried about is not so much the near-term changes, which they always say they can look through, but rather the possibility that inflationary expectations and structural inflation rates can shift compared to what we've seen over the course of the last few decades. And what's typically happened over the last 20 years or so is that you get a big increase in, say, oil prices or other commodity prices. It has a near-term impact on inflation. It doesn't last, it doesn't persist. What the worry is now is a possibility that inflation could persistently be higher, and that would be associated perhaps with those experimental monetary and fiscal policies in the US, or maybe because of supply-side disruption, supply chain disruption associated with the end of the pandemic.
Stephen,
maybe changes in the relationship between the US and China. All those things may matter.
Stephen, what are you looking for today? We're getting U.S. CPI out and expected to be 4.7% year over year, 3.5% ex-food and energy. How important is this print, and how is it going to affect markets?
Well, I guess if it's lower than that, because what you've quoted, of course, is the consensus view, if it's significantly lower, then people will say we can stop worrying about inflation for the next month or so and see what happens thereafter. If it's much higher, I guess that people would be obviously really concerned that perhaps inflation really is running out of control. But frankly, today's or tomorrow's print is not so important. I think it's more the issue of what happens later in the year and into 2022. If you're looking for a lasting rise in inflation of the kind that we saw, say, in the late 1960s or 1970s, it's that longer-term story that matters. And at this stage, you're not going to see any evidence one way or the other as to whether the central banks are right to be looking through this near-term rise in inflation.
And of course, that CPI print is coming tomorrow, Thursday at 8:30 a.m. Eastern Time. Stephen, when thinking about those central banks and how they are viewing this, what assumptions are you making on when the taper is going to start for the Fed?
Well, so much depends on what happens with the inflation numbers themselves, and also, importantly, what happens with the unemployment and employment numbers. The Fed has put a lot of emphasis on the labour market, basically still trying to illustrate or indicate that there's plenty of spare room within the labour market. But I think one thing that is an uncertainty at this stage is whether the people who lost their jobs during the pandemic will return to the same jobs. Will there be more sort of structurally unemployed? Will there be a rise in the natural rate of unemployment? All those things are the kinds of things that the central banks are having to grapple with currently. And frankly, I think the Federal Reserve, like everybody else, doesn't actually know the answer as yet. And we know from the 1970s that if you have a rise in the structural rate of unemployment, you may find that wage pressures begin to emerge sooner than your models are suggesting.
Stephen, thank you so much. An interesting conversation with some interesting analysis. Stephen King, their Senior Economic Advisor at HSBC. Now, later on Balance of Power, we'll be speaking to Michael Froman. He's MasterCard Vice Chair and former U.S. Trade Representative. That interview, 12 p.m. in New York, 5 p.m. in London. And this is Bloomberg.
This is is Bloomberg Surveillance Early Edition. I'm Kailey Leinz in New York with Francine Lacqua in London and Matt Miller in Berlin. Now let's get the first word news. And in the UK, Chancellor of the Exchequer Rishi Sunak wants London's financial district to be exempt from a global tax deal. Next month, Sunak is expected to make the case that financial services should not be included in a plan to make multinationals pay a minimum corporate tax of 15%. That includes global banks with head offices in London. The U.S. is appealing to Iran to accept what it calls a mutual return to that landmark 2015 nuclear deal. World powers are gathering in Vienna for a sixth and possibly final round of talks. They're trying to persuade Iran to accept a cap on its atomic program in exchange for a lifting of U.S. sanctions. And the U.S. has loosened the travel warnings for dozens of countries, including Canada, France, and Germany. It's a move that could ease airline restrictions for people wanting to go overseas. The State Department changed its warnings for almost 60 countries and territories from do not travel to, quote, reconsider travel. That's after the CDC changed its methodology for its own health notices. Coming up, we're going to have more on the G7 with Robin Niblett, the director of Chatham House. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kailey Leinz in New York. Matt, we talk about inflation, whether it's coming from China or not, but actually, even more interesting, we not only talk about meme stocks, and I think we're waiting for Gamestop a little bit later, but Bitcoin left, right, and center.
Yeah, I mean, Bitcoin, because of the volatility, gets as much love as the meme stocks for the same reason. You see the price dropping down. I think yesterday touched 31,000 and change, but all of a sudden everyone's forecasting 20,000, which seems like a big jump, but actually, if you put it into perspective, would only be like a 50-60% drop. It wouldn't be terribly unusual to see that kind of move in Bitcoin over a longer period of time.
No, and this is what we've heard, right? I mean, usually asset prices, I guess, have ranges, but we've always been told, look, Bitcoin could go 20,000 and then to 500,000, depending on a number of things. So I think that's what we're watching out for. And Kailey, this is all playing out in the markets.
Well, lucky for both of you, I have both meme stocks and crypto in this market check. I do want to talk about the broader equity market first, though, because really, I think we're looking for a catalyst. You're not seeing any major moves. We're down on the stock 600 in Europe by about 1/10%, so coming off of an all-time high. And here in the U.S., we're right around record highs as well, just shy of it, but not a lot of movement in the futures market with S&P E-minis up about 2 points. A little more movement in the Treasury market. You are seeing yields coming down 2 basis points on the 10-year to 1.51%, the lowest level actually since early March. And then, of course, you were just talking about Bitcoin, Matt and Francine, right now around the $34,000 level. So $20,000 does seem like a big jump to the downside, but with this asset class, you really never know. Now, as for those meme stocks, we're no longer talking about the poster children of before, the AMC and GameStop. There's really a new batch of them, one of them being clean energy fuels. It is higher by 42% in pre-market trading. Clover Health by 17%. You also have Workhorse higher by double digits, around 11% right now. And the gains continuing for Wendy's. This stock up 25% yesterday, up another 5% in early hours, Matt.
I hope Wendy's takes advantage of the spike in its stock price and expands internationally, at least to Berlin, because you can't get Wendy's here.
Because Matt Miller wants a Frosty.
We have in London, I believe Terminal 5 at Heathrow has a Wendy's. At least I used to go there a lot when I lived in London. Here in Berlin, it's nowhere to be found.
I think they've redone Terminal 5, Matt.
Yeah, since I lived there, I'm sure they've redone it a couple of times. Listen, speaking of London, I've got a great chart here, and I'm going to walk our radio listeners through it. But I heard reports that Rishi Sunak wanted a break for the city of London when it comes to the global minimum tax today. And I thought, wow, how much does London actually produce in terms of gross domestic product? Well, it turns out to be more than Ireland. And, you know, Ireland is the punching bag for European tax criticism. It is smaller than London in terms of GDP. London also bigger than Belgium, which probably isn't any surprise, and Scotland, which definitely isn't a surprise. But it's huge. We're talking about almost 2/3 of $1 trillion in GDP for the city of London, Francine.
Actually, you know what, Matt? So Wendy's is not at Terminal 5. It's not at Heathrow, but they just reopened days ago something, I think, in Stratford, and then they're opening a second restaurant. So maybe Berlin is next on their
Stratford
to-do
upon
list.
Avon?
I think it is. Nope. The other Stratford, closer to London. Now, with G7 finance ministers securing a landmark tax deal, the G7 Leaders Summit in the UK this weekend starts with some positive momentum. But as a group comes together face-to-face for the first time since 2019, many important issues, of course, remain on the table. Bloomberg's Anne-Marie Hordern has a preview.
U.S. relations with traditional allies frayed under Donald Trump. President Joe Biden has vowed to repair this. One area where the group should find common ground, it stands towards China. The world's largest democracies are increasingly determined to combat China's rising influence, be it in so-called vaccine diplomacy or the pace of reducing its reliance on coal. Along with discussing pandemic response and vaccine distribution, leaders will consider climate change, with every G7 nation expressing support of green goals. This meeting offers a chance to craft a strong common message, but the debate over details could expose divisions. President Biden, Italy's new Prime Minister Mario Draghi, and Prime Minister Yoshihide Suga of Japan will be attending their first G7 summit as leaders, while be Angela Merkel's swan song. She's leaving office after 16 years as Germany's chancellor. Her departure will surely alter the dynamic at global gatherings of democratic nations such as this.
Well, for more on the G7, let's get straight to Robin Niblett. He's director at Chatham House. Robin, always a pleasure to speak to you. Thank you so much for coming on. First, do we need to make sure that the EU and the UK actually fix their differences with Brexit and the Northern Ireland Protocol to be sure that the G7 can get back on track to talking about things that concern everyone?
Well, I do think they're going to get their problems over the border in the Irish Sea resolved ahead of the summit. I mean, I think we've got meetings going on right now between David Frost, the British negotiator, and his EU counterpart, Maros Sefcovic. But very tough language in the lead up to it. Some hope, supposedly, that Biden might prevail upon Boris Johnson to make some compromises in return for keeping that strong special relationship in place. And Biden, obviously known to be quite supportive of the Irish peace deal in particular. So the question is, can they make sure that this doesn't become a roadblock to a good G7? I think they're going to push off the EU-UK discussion until later in the week. It'll probably get really tough after the G7 summit.
But really tough. And who will have to compromise, Robin? Is it the EU, or will the UK kind of give in with, as you say, a bit of support or maybe pressure from the US?
Look, the problem is that there's no easy way to give in. There's a whole series of cliff edges coming along in the trade that takes place between Great Britain and the Republic of Ireland. And these are going to be hitting literally week by week over the coming months, each month that we see going ahead after the G7 time, right through to October. So it's literally deals about chilled meats. It's how many customs border posts are actually agreed and put properly in place by the British government. These things are literally going to have to be knocked out month by month. And you're not going to have a single moment where everyone says, right, we fixed the Northern Ireland deal.
Robin, I have to ask about the tax deal. People were so optimistic about this and saying it righted so many wrongs and all getting behind it. Now Sunak wants an exemption for the City of London. Pretty soon Germany is going to want an exemption for the Ruhrgebiet, and the U.S. will want one for Silicon Valley. Is this ever going to get done?
I think it'll get done, partly because all of the governments need to be able to show that they are turning the tax system around to one that actually supports the middle class. And this is the big push that we've heard in the Biden administration of middle-class foreign policy. We've seen the same here in the UK with the leveling up agenda. And for the big companies, who everyone knows now are not paying their fair share, as seen by all of the governments. That's what they put out, that message. You can't turn around then not have the success later on. But clearly, each country has got its protected areas. And I think to the extent that the Biden administration seems to be making sure that the tech industries of the US are not unfairly hit, the UK is in right behind it. But in the end, I think there will be a deal done on this front.
You know, yesterday, David Weston on Our program, Balance of Power, spoke with the former Taoiseach of Ireland, who said, well, he seemed to be behind the deal as well, but said that Ireland would end up losing revenue as a result because companies would leave. Is there any benefit to, some competition in terms of global tax policy?
Look, I think there's always been benefit to global tax policy. The question is, what is the bottom? And with Ireland at 12.5% compared to a rate which is going to be in the 20s, even into the low 30s around most countries, you've got a level of divergence that allows companies to arbitrage between different markets to an extent that is beyond the competitive advantage and beyond those positives that you can get for competition. So I think that trying to find a floor, which is what you have in any tax system at the very least, even if 15% is low, to get to an agreement that is G7 and, of course, importantly, can then be G20 and then ultimately OECD. So it actually captures a large enough market. Would mean you still have plenty of room for competitive play above that 15% minimum, and maybe that 15% might become 18 in the future. But you don't have the leakage and the spillage and the deep frustration this is causing for governments around the world because their publics are really upset.
Well, can we just characterize the strength or weakness of the position of the Biden administration coming to discuss this issue a day after talks on bipartisan infrastructure plan with the head Republican negotiator collapsed here in the U.S., taxes being a big issue and getting a bipartisan agreement? How difficult is it for the Biden administration to push for a global minimum tax when they can't even find consensus domestically?
It's every government. I mean, tax is the issue that is at the core of your domestic policy. It's the area where in the EU, there is pretty much no central competence at the EU level because each government is hanging on to its own tax policy as much as it possibly can. So every government is weak at some level going into this. And we're going to see in the coming months, each government having to do compromises. The reason I'm optimistic is in a way each one needs the other to be able to strike the deal. Each side needs to be able to show that somebody else is moving to have leverage back at home. The idea that you can come forward from a strong domestic position, for example, President Biden, there was already doubts here in London that the tax deal that would need to get through Congress to be able to do market-based tax systems, taking those extra 20% above the 10% profit-making threshold. That's something that would have had to be passed by the US Congress in any case. Right. So at the moment, we're in a dance, and I think it's just too early to be able to give a clear picture. As I said, I'm still convinced we'll get a deal done at the end of this.
Of course, the U.S. and the U.K. are both in a relatively stronger position on the vaccine front, and President Biden and Prime Minister Boris Johnson have been really out front in pushing for Western countries to share their vaccine stockpiles with the developing world. Are other European nations going to support them in that effort?
I think definitely. The UK, you could say, and the US are late to the party on making these commitments. They've made the commitments to COVAX, to the global vaccine providing authority for developing countries around the world. But in terms of actual delivery, they've been behind the curve. The EU has been able to make the point that it has been one of the big exporters of vaccine, partly because of the manufacturing that takes place there. But they've also been making their own commitments to be able to get vaccines out, in particular to sub-Saharan Africa. If Africa goes wrong, Europe in particular is going to feel it. If there's a big outbreak there, as there's been obviously the huge outbreak in India and in parts of Latin America, if Africa goes in that direction as well, you're going to get a huge amount of pressure, adding to migration, adding to instability. So I think actually the EU and European governments will be strongly behind the push that Boris Johnson and President Biden have been making. As I said, they've got a lot of the credit for it, but they haven't made the move yet.
Robin, what happens to China if at the end of the day, we find out that COVID was actually made in a lab?
Well, we will never know for sure, I think, because the Chinese government will make sure that you will never know for sure if that turns out to be the most plausible theory. So the problem here is more about how untransparent is China going to be about the exact origins, in particular these reports that at least 3 of the lab technicians actually came down with some type of respiratory disease back in November of 2019. If these stories are not effectively addressed, it's going to add to the level of suspicion about China. But ultimately, there are so many other deals that we're trying to strike right now, as we've discussed in this conversation. China needs to be part of a global tax deal. China needs to be part of a COP26 agreement in November at the end of this year. China's probably going to be part of the answer to development in Africa. And ultimately, most companies in America and in Europe are trying to get on the back of the Chinese growth engine. So China's not going to give in on this. And I think what it does is it firms up the solidity of Western countries and taking a much tougher line towards China, but it's not going to be the final element that pushes into some type of new economic Cold War. It's just going to be messy and unclear.
Robin, thank you so much. Robin Niblett there, director of Chatham House, with a number of questions on a number of topics. Now, later on Bloomberg Surveillance, we'll discuss more on the G7 summit with Eurasia Group president and G0 media president Ian Bremmer. That's at 6:30 a.m. in New York, 11:30 a.m. in London, and this is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua in London and Kailey Leinz still in New York. Now, Bitcoin is gaining some ground today, but it's been a tough week for the OG of cryptocurrencies. It's led some strategists to eye $20,000 as a new downside target. That would be, what, 75% off from where we are right now. Let's get more from Bloomberg MLive's Eddie Vanderwalt, who has been following cryptos for the past couple of years very closely. And Eddie, what do you see in terms of the possibility of a move down to 20,000? I guess it's not entirely outside the realm of possibility, considering the volatility we've seen with this asset.
Oh, absolutely. I think, look, over time we have seen that Bitcoin is capable of significant drawdowns as well as significant upside. And, you know, that's what a lot of people love it for, particularly this volatility. But, I think we're starting to see a flaw, which is not really what we have seen in previous cycles. In previous cycles, what we saw was when you see the run up, it goes parabolic. And when it comes down even more sharply. This time around, it feels like it's a little bit more controlled on the way down. Now we'll see whether that remains the case in the coming weeks.
Eddie, is it right to look at some of the technical support, that we've seen with other asset classes with Bitcoin, or is Bitcoin just in a class of its own?
I think, to be honest with you, I think technicals is absolutely the right way to look at Bitcoin. Because Bitcoin, don't forget, it trades almost exclusively on animal spirits. And that is what technicals try to measure. It tries to measure, when we see, when there is momentum in a stock, when people are getting excited about it. And this is what you try and measure. And so over time, I think I've seen some of the best predictors of cryptocurrencies have been the technical analysts. Certainly the fundamentals are a lot harder to call.
That's the technical side, Eddie. What about on the correlation side? Your colleague on the MLive blog, Mark Cranfield, put out an interesting post overnight about the correlation between Bitcoin and the Bloomberg Dollar Spot Index, essentially saying you have to see the dollar recover in order for Bitcoin to gain any kind of traction here. If we get the weaker dollar story that everybody's calling for, what does that mean for Bitcoin?
Yeah, I think Bitcoin has become much more of a risk-on play of late. I think that's a good thing for Bitcoin, right? Because as you see more institutional money flowing into it, it will start to correlate with other assets, which it never had been in the past. So, look, I think if we see, tech stocks selling off, I think that would be really damaging for Bitcoin. I think at this point, Bitcoin is trading a little bit like a tech stocks, but one with, significantly higher volatility.
What do you see in the other cryptos? A lot of people get down on Bitcoin because of transaction time and costs and its lack of abilities that, for example, Ether has. Are other coins rallying while Bitcoin falls, or does the, I guess it's not a rising sea raises all ships, but a falling tide brings everyone down?
Right. Right, if you pull the plug out of the bathtub, everything sinks down, right? I get it. I agree with you. And look, absolutely, that is the case. What we're seeing right now is the wider space is falling alongside Bitcoin. Ethereum slightly outperforming year to date, but I think you need Bitcoin to do well, to bang the drum for the cryptocurrency space and bring new investors into the space. And if you don't see that, we saw that in 2017 and we saw it in previous cycles. You do see the other cryptocurrencies come back down if Bitcoin comes down.
All right, thank you so much. Eddie van der Walt there, our MLive superstar, actually talking about everything from Bitcoin to
in the office
inflation
too, which is cool.
In the office, it was exciting for us as much as it was for him. Now, coming up a little bit later, former TD Ameritrade Chief Executive Joe Mulya. That's at 1 p.m. in New York, 6 p.m. in London. And this is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kailey Leinz in New York. Now, Tom Keene, co-anchor of Bloomberg Surveillance. I say it every day, Tom, but everybody knows what you anchor and who you are. What are you looking at?
I know
so
you and I are in
G7
therapy.
with some star guests. I'm winning the therapy.
We've got a wonderful guest today. Of course, President Biden heading over to your space. He's doing a poldark. He's going to Cornwall. And, Francine, we start strong on American capitalism with Luigi Zingales. You know him well from Italy. We will not speak Juventus football with Luigi Zingales, but looking forward to his discussion on America. Ian Bremmer will be with us as well. Really looking forward to that as he assesses a G0 world and President Biden's first trip abroad. On the chart, let's go narrow, Francine. This is our ace reporter in Hong Kong, one Tanya Chen, writing up a cross rate that I've never done before. This is what I love about Tanya Chen's work, is it's totally obtuse. Taiwan Dollar versus Korean Wan. And I didn't know this. Taiwan Dollar has been hugely strong versus Korean Wan over decades and decades, and again, it has strength right now.
Yeah, well, congratulations to our Tanya Chen for a wonderful article. And also,
I didn't understand it, but other than that, it was great.
Tom, yeah, you need a PhD to understand it. I know you want to ask Luigi about Juventus, but you must ask about the European Championships starting next week.
I have been told about this. I may have. I got an invite from Alan Ducas's restaurant to go, Francine, and watch France, Germany. Should I do this?
I mean, I'd watch Italy, France. That's where there's
France,
attention,
Germany,
certainly
really?
in my household. But Germany, maybe Matt Miller will disagree. This is what else we're watching for. Kailey, what's on your radar?
Bank of Canada decision at 10 a.m. Eastern time, expected to kind of continue to lay the groundwork for tightening monetary policy, that path toward normalization. And yes, it's not a G3 central bank, but could G3 central banks follow what the Bank of Canada does? That's why I'm interested, Matt.
I am watching Ferrari. We already discussed the fact that they've got a new CEO, but they took him from a chip maker. You're going to look at here pictures of the SF90 Stradale. This is a 1,000 horsepower hybrid, but here's to hoping Ferrari sticks with the naturally aspirated engines. This is Bloomberg.